Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 19th of March, 2022, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the fourth week of March. Let's begin with the Euro, where it has been attempting to recover and climb back up after serious weakness for a couple of weeks, and it has struggled to climb back above this swing low area the previous week, and this week it managed to retest that level again, and that's right at the resistance still before pulling back into the 110 round figure level. And this is this swing low is just above the 111. So this was after a couple of significant news last week from the Federal Reserve. FOMC has raised interest rates and projecting another 6 more for the rest of the year to attain a 2% interest rate target. And then on Thursday, there was the Bank of England's turn, following the previous week was the ECB. So it didn't help much, but it did recover from this 110 level. After the Federal Reserve, it climbed back up and continued on Thursday as well before pulling back on Friday. So now it looks like it's going to consolidate between these two fib levels, the 100 fib at the swing low and the 138, and as well as the in between the 110 and 111 round figure levels. So let's just change this now to support. It's going to be at the support level. This down here is still going to be support, key support at the 109 and the 162 fib area. So this is still resistance at the swing low. If it does try to break out higher slightly, there's still the significant resistance down here, and another previous swing low, and with the daily 55 EMA coming down as well, along with the round figure 112 and the 78.6 fib retracement area. So a lot of confluence of resistance levels, even if it does break out higher through the swing low area. And before that, there's also a previous swing high area, a swing low area, significant swing low previously. So yes, there's a lot of roadblocks ahead. So even though the FOMC did raise rates, it did not, the US dollar had already been priced in and it sold off. So with the euro already at the lower levels, it managed to recover back up. We take a look at the 4-hour time frame. You can see this, the dip initially after the Federal interest rate, Federal Reserve announced their interest rate hike, and bounced back up and all the way back up into the resistance again. can even go to the 1 hour time frame, and this was the dip lower, followed by the bounce back up, and then the strong move on the Thursday, and followed by the retracement back down again to 110 area. Right, no major news this week, just the flash PMIs. And let's take a quick look on the weekly time frame, and that's the spinning top of the previous week with the long wicks, and basically it bounced up to retest that upper wick, which is at the high of the previous week. So it's almost like a morning doji star reversal pattern, but we'll see if it's possible to break out higher, because there was this sell-off on Friday forming this upper wick. But it does look more likely to consolidate further for this week. Okay, let's take a quick look at this fib retracement, and it didn't quite get to the 50 fib retracement level, and then settle around the 38 fib retracement area. So for now, we'll leave it here at the swing low, where it has not been able to break out higher. Okay, let's also take a look at the US dollar index, the DXY. Here's the DXY, US dollar index, and after hovering at the 99 level from the start of the week, and Wednesday was the big drop, start of the drop after the FOMC announcement that they would increase rates by 0.25%, and with an additional 6 rate hikes for the year, for the rest of the year, to reach a 2% interest rate target. So it seems that they have already priced in that move from all these move up earlier from this breakout from this high, and then it has settled back to retest this zone here, and settling around at the 98 level. So let's take a look on the 4-hour time frame to see the move, even down to the 1 hour if we could. Yes, okay, so right at the start of the news, this should be the start of the news here at the release of the statement at 2 p.m. US Eastern time. So initially it did climb up higher as it was positive for the US dollar, but after hitting these resistance levels, it was promptly rejected and continued lower into the 138 fib extension here, and then continued lower the next day on Thursday before climbing back up slightly on Friday. So this was a case of buying the rumor and selling the news, and it's has already crept back down. Let's take a look at the weekly time frame. And this level here came all the way from this wick from June of 2020. It was a swing high area, and it dipped down to find that support. In fact, the previous week it was also the swing low area. Okay, so we could now also move this fib to check the retracement. And it came back to the 38 fib retracement level, which is where that previous swing high was, and the support zone. So this is still a support level. We can move this resistance zone down lower here to this swing high. And that's the high at 99.44. So it could be settling into a consolidation range between 98 and 99. And see how long that zone will hold. The next target on this longer term fib extension is at the 138, which is right close to the 100 zero figure. So we'll leave that for now. All right, there's no major news this coming week, so we'll see. It all depends on how the conflict in Ukraine shapes up, and whether there's any hope for peace treaty. But meanwhile, there's some consolidation already forming here. Let's also identify another support zone at the 50 fib retracement. It could also dip down to that level because there's a turning point here with the evening doji star here, right at the 50 fib. So we could also identify this area. Okay. All right, so let's move back to the other pairs. Let's move on to the cable, where it was struggling and has been weakening over the past 3 weeks and fell right into the support at round figure 130. So that's a very significant round figure here. It did not break down lower and extend to the 138 fib and the support zone. So it did manage to find support on a Tuesday after hitting it lower on a Monday. And on Wednesday, it managed to make a strong move at the expense of the US dollar after the Federal Reserve rate hike. And then on Thursday, that's where the Bank of England raised their rates by 0.25%, but it did not continue very very much higher, and it was basically stuck in this consolidation area around the 160, around the 100 pip. So even though the Bank of England did raise rates by 0.25%, they were very cautious and not indicating whether they're going to continue increasing rates on, and not pushing for a 2% target like the Federal Reserve. So with that, the cable sold off and ended up as a spinning top, almost a doji for the day. So it did not turn out as bullish as one would expect with a third rate hike in a row. In fact, let's take a look at the 4-hour time frame. And this was the move down initially after the Federal Reserve's announcement, and then it managed to recover, bounce back up as the US dollar weakened. And at this swing high, it did not break out higher and continue higher. Instead, it fell back down, but managed to recover somewhat after that, and just consolidated in this zone here above the 131. And basically, it was constrained by another round figure above here at 132. So it could not break out higher above that. But it did manage to climb up to retest this resistance on Friday. So there could be possibility of a continuation move next week. Let's add the another round figure here at 132. All right, go back to the daily time frame. And let's take a quick look on the weekly, and it did close bullish for the week and climb back up above this swing low as a piercing line candlestick. So there is a possibility of a continuation bullish move back up to retest this resistance area at the 786 and perhaps test the 133.00. So we'll see whether that's possible for next week. Let's see if we need to modify these fibs in any way. Now this doesn't look like it. We'll this move back up will bring it back to the 38 fib retracement, but it started to move down from here, so we could try to get back up into the 50% retracement area, but not the conclusive range for now. We'll leave it here as it is. So these are significant resistance levels. This is now intermediate area. This is the likely intermediate support now. At 131 and at 130. So that will be support, and if it does dip lower, we should see a strong support there, and it should try to break through the 132.00 and target 133. Otherwise, there could be some consolidation. And there's no major news as well next week. Across all the economies, it's just the flash PMIs. So this will be a likely target if it can find support, strong support above the 131 and target the 133 area. Right, so it could also dip a bit lower below this 131 and perhaps find a lower support, and but which means that it's likely going to consolidate. Okay, so we'll see how it goes for next week. Let's move on to the Aussie dollar. And the minutes of the RBA monetary policy meeting came out on Tuesday, and they were not very hawkish, they were very cautious, and that's this Tuesday, that Tuesday candlestick spinning top, which managed to find support at the 62 pip retracement here, and managed to recover and climb back up above the daily 200, the resistance zone, and climb back up above 74 round figure, and trying to target this resistance zone here at the 138 pip extension of the reversal move. And trying to climb back up above this into the bullish channel again. The 78.6 is going to be a strong support with the daily 55. So this is also a support now. Okay, a strong bullish move on Wednesday and Thursday at the expense of the US dollar. If we take a look at the 4-hour time frame, that was even before the FOMC. Oh, it is. Yes, there is the FOMC time frame, and the initial dip lower and the bounce back up along with the other majors. Then continued through higher on the Thursday until it finally crossed over the 74 late on Friday. Okay. So it is possible that it's going to try to extend its move, and there is some potential resistance up here, this previous swing high. But if it's able to continue, it could push through that and eventually perhaps even target the 162 pip extension. That's at 75.28. All right. So we'll see if this support can hold, and the Aussie to continue to drive higher. Let's also take a look at the weekly time frame, and yes, there's a very strong bullish bounce for last week. And it does look possible if we find some resistance up here. It is possible that it's could drive it up to the 200, this 162 pip extension area. Okay, let's go back down to the daily. So it is possible for it to continue to try to target this zone, this resistance zone. And that's where the 162 fib is. All right. So do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week. And cheers for now.